Nigerian stock market's strong performance of 37.8% in 2024 was led mainly by the oil and gas, insurance, and the banking sector. According to market analysts, the rally defied the effects of the Naira devaluation, high inflationary environment, and the weakness in the overall national economy. Arise business anchor Bosunum I went to the stock exchange a few days ago and sat down with this interview with David Adonri, who is one of the oldest banking broker-dealers at High Cap Securities, to get more insight into the 2024 year as well as outlook for the new year of 2025.
The year 2024 has been a very remarkable one for the Nigerian exchange, and throughout the 365 days of the year, in particular, those trading days and sessions of listings, of facts behind the figures, of getting the market to understand new products and new horizons that the Nigerian exchange and the group itself as a whole has brought together, the ups and downs, sometimes the losses of dear ones, like a former chairman of the exchange. Overall, it's been a good year. And I'm sitting down here with David Adonri. He's one of the oldest stockbrokers on this trading floor, and I've interviewed him for a number of years on television, on radio, across other platforms. And he's here with me to give what are called a crossover interview into the new year, 2025. Great to have you, David Adonri.
Thank you.
Thank you so much so it's been good speaking with you over the years. And as an experienced stockbroker, what has made the market here resilient, in particular for 2023 to 2024, with fuel subsidy removal, exchange rate realignment, inflation, very stubborn, yet the market eked out very good returns, not just on equities, in fixed income, as well as exchange traded funds. Give me how this really happened. How did you do it, you, the market community?
Thank you very much. I think the credit must go to all the stakeholders, including the policymakers, the market operators, the regulators. In fact, all the stakeholders have contributed to the record-breaking performance of the equities market in 2024. You will recollect that the rally actually started in 2023 when this administration took office, and the president hit the ground running, commencing with market reforms. Apparently, those market reforms stimulated a rally which has extended up to the end of 2024. Last year, when the rally started, the all-share index closed at about 74,000 and appreciated by about 45%. But this year, which has been a record-breaking year, we have seen the all-share index of equities appreciating to about 103,000 and appreciating by about 38%. So it's been a wonderful year from all ramifications. The aggregate index, which is the all-share index, appreciated by 38%. But drilling down into the various sectors of the market, some of the sectors have performed outstandingly beyond expectation, like the oil and gas sector, which has year-to-date appreciated by about 160%. Insurance is almost hit 100%, and so on and so forth. Even the banking sector that appreciated the least has done about 20% for this year, 2024. And we believe really that 2025 will be the golden year for the banking sector, wherein the sector will try to cover the gap between it and the other sectors, considering what has started for the sector in 2024, which will continue into 2025, which is the recapitalization exercise. So generally, it's record-breaking year. The all-share index actually hit a new height in 2024, getting to around 4,000 points in March.
Almost, yes, and it came at it. And then the detail was the same level as about to end. But very important to see that the markets are also taking hold in terms of local participants. We've seen foreign investors in this market, but we've also seen local institutions and retail investors come back strongly to the market despite the tough environment. And we can see the banking sector offers being well subscribed. The news is coming that the insurance sector will also get some recapitalization, and we have new listings. What does that tell you about what to expect in the new year 2024, David?
No, let me just go back to the nature of the market now compared to what it was around the period of the global meltdown in 2008, when the market was dominated by foreign investors together with retail investors. So that structure has changed. We now have a market that is dominated by domestic institutional investors like the PFAs and so on and so forth. And these are people who, in a cold-blooded manner and in a calculated manner, approach the market. And so they have been able to impact the market with such sophistication that we have not just the secondary markets firing on all cylinders at a high level of safety. We also have the primary market that had been inactive all these years, firing on all cylinders, especially orchestrated by this recapitalization exercise for the banks. So all these have boosted the investors' confidence, especially of retail investors. And a lot of them that were severely wounded in the past are now coming back gradually into the market. And so this has increased the demand for securities in the market. And a lot of these retail investors too, who had over-concentrated in equities in the past, they are now also understanding that there is another side of the market beyond equities, which is bonds or debt. Yes. And we are seeing a surge, especially facilitated by the issuance of federal government savings bond, which is directed at retail investors. So all these have rekindled the interest of investors across board, retail investors, institutional investors, and also with what has happened in the macroeconomy recently, wherein a lot of the foreign investors who could not repatriate their funds, those funds were trapped. And the central bank clearing that backlog and so on and so forth. So that has boosted the confidence of foreign investors such that we're having a lot of them in. Overall, beyond all this human element we have spoken about, there is that element of technology the NGS has brought in. So the primary market that was previously not driven by technology, that was analog, is now fired by technology. And
now you talk about firing. Yeah. Now something else is revving, and I'm hearing that on the market street about cryptocurrency. The new leadership at the SEC is interested in cryptocurrency, in digital asset trading and all of that. And for those of us on this market for a number of years, yourself, myself, who has to understand all of this, do you see that as a new horizon that the brokerage community, the CIS, the broker dealers would have to attune themselves to, knowing that we have a youthful population that are really focused on this new set of asset classes for trading? Is that something you're looking forward to in the new year 2025?
I thank you very much for introducing this element of cryptocurrency, because it's a product of technology that we have been talking about, which the market has embraced, both at the regulatory end and at the market end for quite a while. And so everything is now gelling and crystallizing into the trading in digital assets in this market. And of course, earlier in the year, SEC came up with the rules. I think the rules have been on, but I think they enhanced the rules on trading.
You have a licensed digital
cryptocurrency exchanges, exactly.
Sandbox, sandbox for a few others.
Yes, and so a lot of market operators will come in and start creating or rather, start instruments. Issuers are also expected to come in and start creating those digital instruments that will become available to the investing public, especially the Gen Zs. So they will have something. They will have no excuse not to be in the market now.
So we could have digital currency assets listed on this trading floor, perhaps in next year, 2025. Who knows?
We are very optimistic with the extent the market has gone in terms of technology enhancement, that digital assets will be issued and listed in this market in 2025 and be available to be traded on in this market in 2025.
So for folks who spent decades here, for you, it's going to be a bit of a learning curve, isn't it?
Not right. Remember when the market was adopting the automated trading system? There was a fear that we were analog people. It would be difficult for us to migrate. But the migration was smooth and seamless. So a lot of our market operators are well intellectually versed and acquainted with digital assets, cryptocurrencies, and a lot of them actually behind the scene have been trading in those assets. So if they are therefore put on this market officially, on the trading board, I can tell you that market operators will find it very easy to interact with their clients and assist their clients into investing in those assets.
You know what those assets will mean for me in essence is that if they are listed in US dollars, then we can have some dollar asset back on this market.
President Tinubu is much more interested in Nigerianizing the Nigerian currency space, the Naira, because he says his budget is in Naira, and so he wants everything in Nigeria to be focused.
Naira is the currency to hold.
Yes, because if the assumptions behind this 2025 budget are things to go by in 2025, the Naira should be a strong currency to be held by discerning investors in Nigeria. And it should be a reference point for all commercial and financial activities in Nigeria. So we are very optimistic that we have seen a market wherein records have been broken, a market akin to a candle burning from both ends, because investors have made a lot of profit from equities end. They've also made a lot of profit from the debt end. Imagine the yield on debt. Where are you going to have that yield anywhere in the world? So if you've been in this capital market in 2024, you have enjoyed from both sides of the aisle. But 2025 is a year to watch out for.
2025 is a year to watch out for. We agree with that.